Yeah, you have 1 to 2. Yeah, you can. You can search BI.
Hello, everybody. This is Ad Zeros, and very quickly, we're going to start an interview with the Thor Young. So stay tuned. Come and join us. In a few minutes, we're going to connect with Thor. Thank you all for joining us. Hello, Thor.
Hey, how's it going? Can you hear me?
I can hear you. And let me just bring your screen here. Awesome. All right. So, how's your day?
I'm not hearing anything.
Can you hear me now?
That's why.
Can you hear me, Thor?
Can you hear me at all?
I can hear you.
Let's try that. I'm going to try a different audio source.
Hello, everybody. Thank you for tuning in. We're just waiting to set up the solve the technical difficulties.
I think I can hear you now.
Can you hear me now?
Yeah, I can hear you now.
Yeah. Hello, Thor. Welcome.
Thank you. For some reason, my headset decided it didn't want to work, so hopefully I won't get too much audio. And
Yeah,
but I think I
I
can
can
hear
hear you
you now.
clearly. How about you guys give a sound test? Can you hear Thor clearly? Can you see Thor? Awesome. So how's your day?
Oh, it's going really well. I'm enjoying a pretty interesting, day in the markets today. So I had a really nice squeeze on Tesla that I was able to play this morning.
That's nice.
So got that done with and out. So a lot of fun today.
Yeah, I was also thinking that in the morning that Nasdaq was already 7% down from all-time high, and this gap down may likely squeeze a lot of growth stocks moving up. And I was long basically Neo at the 3080 in the pre-market.
Oh, fantastic. Yeah, that's awesome. A very similar intro to me on Tesla, really, because you're, 3080, that was around somewhere probably around like 845,
Exactly,
right?
yeah,
And
yeah.
yeah, and Tesla, I was almost the same exact time. I got into Tesla around like 855, somewhere right around there. So like around 583. And got to move all the way almost up to 624 on it.
But I
So
was not expecting
quite a
that the
move.
straight move up, so I sold, before the market opened, and then I didn't get a chance to get back in the boat because I was thinking that because this was over the VWAP, I was thinking it might just gonna pull back a bit, and maybe extreme pullback. People gonna think, oh, is this short? Everyone gonna get start shorting that, and then gonna squeeze much harder. But
Hmm.
it's after the 8:30, there was no squeeze, so I don't know who's buying that without squeeze, right?
Right. Yeah, I mean, today's market is just so bull all the time. You can almost just expect, and that can be to a disadvantage for some at times, obviously, but you can almost kind of expect at the open to just have the buyers just kind of charge headfirst into it. And if you're ready for it, you can take advantage of that situation quite
Exactly.
often. These gap down days often provide beautiful squeezes as people try and buy the dip,
Yeah.
and we can ride the squeeze basically as that happens, and yeah,
Yeah.
it ends up being a good time.
It was unpredictable. I was not expecting, even though if you look at the first 5 minutes, SPY was down, but all stocks are moving up. So that was a crazy,
Hmm.
I mean, today was market was like a manipulative, I guess, what I felt. Uh,
And it took the SPY a little while to do its squeeze, and finally around 10 o'clock it managed to pull that off, and then it had a nice sell off down into the in around like what 410 or something like that, I think. And now it's all the way back up. So what are you gonna do?
exactly, yeah. And there's no pullback. So there was, I was looking at the space when it's forming a bull flag over the VWAP. I was wanted to go long, because space was just with the volume, if it had a 1 minute long candle, and I was looking at it, but then I get distracted with other stock, and then it's just ran, without me, and so I didn't take.
Space the one that helped. Did
Yeah,
Space help today, or was that a different one? I think it had, maybe that was because it had such a hard rip. I mean, look at that thing. Yeah, it had a great rip today. I don't
uh,
think it halted, but man,
all
it
right.
went crazy.
Guys, thank you for joining us. So we have some audience. We hope to have more audience because a lot of interest has been shown on the Twitter, on the YouTube, on my Facebook. So we're gonna give a couple of more minutes. We're gonna say hi to our friends ARY Band. Thank you for joining, friends. So thank you for joining. And we're gonna have we're gonna have an amazing time now with the Thor. I've been personally following Thor for a while now. That how his journey, his trading has been transformed from, and I see a little bit, uh, you know, different innovation in his trading. He now use more pivots. Before he was not doing much more. I think he was doing differently. So we will gonna learn more about his technical learning experience, how he's been so successful. We're gonna know more about his personal life, how he's doing, who made him to change his career. So we're gonna have a lot of amazing talk going on. So please tune in, join us, and share with your friends. Yeah, so let's just give a couple of more minutes and then we can, this session is recorded. So of course, those who guys are missing, they can come back and, hear back. But it's always awesome to hear live. You can even message your questions, what you wanted to know from Thor. And Thor is here today, so we can ask as many questions as we want.
Yeah, I'm a pretty open book generically, so feel free to ask. One thing I've always tried to do with my trading journey is just kind of put it all out there, and better for worse. It's a little easier to deal with that way.
Exactly. I think that's also, I feel that, I just share. I mean, I learn whatever I learn and then pass on through this, a small channel. I share my recap, share my strategies with the people so then they can benefit from my mistakes and it costs less
Absolutely.
to them.
Well, and I kind of feel a similar way. I was really fortunate to to have a little success doing this thing. So anything I can try and pass back. I really generically don't make a lot of extra money from doing these kind of things, but that's not why I do them. I want to do these because trading has and the trading journey has changed my life and given me kind of a comfort level, if you will, that I find awesome and a freedom that I find very awesome. And I would love to try and help as many people achieve that as possible. And that's one of the great things about trading. Unlike almost any other, you don't. You can be the best. Someone else can be the best. You could have 100 people the best. 1,000. It doesn't really matter. There's
Exactly.
enough money out there in the market for everyone to make a little bit, right? So there's no reason to to not be humble. There's no reason to feel like you need to strive to put others below you in order for you to succeed in trading.
Exactly. That's a good
Trading
point.
endeavor is basically just all about you. If you can work you out and figure you out, then you got a good shot at making it successfully.
Yeah, I think that's very true because the market is the only place which is for everyone. Whatever time frame you have, whatever time you have, whatever risk tolerance you have, whatever money you have, you can slowly, learn and then, and then build on that. Rather, you start with a small $10 or you have, because a lot of platform giving you now the fractional share approach, right? So you can even buy Tesla on the $15, right?
Hmm.
So it's a time frame, irrespective of the time frame, is irrespective of your capital, irrespective of your risk tolerance, market is for everyone. So let's get to it. I mean, without joining more time. Hi, Andre. Yeah, feel free to say hi to Thor if you want to say hi on the message, and feel free to write the questions. Or if you wanted to make ask any clarification question on it, feel free to ask. We all here to learn from Thor. I personally inspired from Thor's trading. So Thor, why don't we just start? Tell us, where you from, and how long you've been trading now. What made you to start trading? What your initial days look like? Some just give us a bit background and the context about yourself.
Yeah, absolutely. And I'll apologize out first. I'm actually having a little work done on the house. So if you hear a random grind sound, they're installing like an outlet over there, you know, in the other room, but for some reason they decided to do that right now, even though I told them not to. But whatever, we're gonna do anything about that. So I guess I'll just start at the beginning. So I was heavy in the IT field. I put about 12, 13 years into the IT field. I was a server admin, eventually turned IT manager, and really had a lot of success in that field. But the field was just insanely demanding. So especially time-wise. And then we found out I'm married to my lovely wife, Janelle, and I have 2 children, Jonathan and Allie, and we discovered that my daughter had autism and quite severe. So we had to make a lot of changes in life. So that's why I'm always referencing autism because of her. But so we made these changes in our life, and we had thought we actually relocated from Tampa up to St. Augustine, which is where I live now, because there's a really strong autism school up here, and enrolled our daughter. And that created a new situation. I had moved, I needed a new career, but I needed a career that was going to be flexible, and a career that was going to give me potential to make more money, but also allow me to be in control of that. And that's where things got, you know, really interesting. So I actually started Ubering and doing Uber driving. This was before delivery was a thing, so it was just ride sharing. And heard a radio ad for the Robinhood app. Oh, make an extra $10, $15, $60 a day doing the thing. I was like, well, if I could make, you know, $100 a day doing Uber, and then made an extra 40 or 50, you know, while I'm sitting in a parking lot, you know, waiting, that would be really cool. So, and I did that for a month or so. And I didn't hit any major big score. You know, I didn't pick up like Bitcoin, or, you know, I didn't make a whole lot. But I made a couple $100. And I was like, man, you know, I think this is something I could pull off. And my wife actually really encouraged me to go after it. And I went online and I found this book by this guy, Andrew Aziz, right? And there's a lot of the folks who are associated with me kind of tie into him, which is I just found that's how to, you know, day trade for a living. And I thought that'll work. So I started reading that, and then that kind of got me started down my, you know, my trading journey. I became a member of BBT, Bearable Traders, and then later got invited to be a moderator once I started having some limited success, and then, you know, so on and so on. And now you know, here I am with you fine people. So I mean, it's been quite the journey.
Awesome. Thank you. Thank you, Thor. Those of you guys don't know about the Andrew, let me just give you one more minute on shout out on Andrew's achievement. I think I personally, you know, love the Andrew style. Andrew has written a couple of books, and one is that I think still I have on my shelf is How to Day Trade for a Living. He teach in that, you know, a lot of different strategies, but I think that what is the main idea, I think what Thor is also referring is that this is, if you wanted to choose this as a career, it is not going to be like a, you know, Dogecoin millionaire or the Bitcoin millionaire, but you need to take a baby step, slowly, day after day, and slowly you're going to reach to that point. But if your intention is to be a millionaire on the second day of the trading, then this is not for you. It is a profession, and I guess that's what he's referring, that he took the baby step. He started day trading for a living. Those who have not read the book of Andrew, you know, you must go check it out. The BBT community is a wonderful community. A lot of free resources available on their YouTube channel as well. So
Yeah, it is a lovely resource, most specifically about it's a lot to understand what you're going to get into, and it's not even that the book is you know, going to give you like all of the ins and outs of everything, but it gives you a good glimpse, you know, into kind of the majority of facets that you're going to need. And I think it states it in the book, and I think I like it by the end, which is by the end of the book, you're going to have a pretty good idea if you're really interested in continuing on the journey. So the book is not the end of a journey. The book is, you know, much merely the beginning. And I mean, Andrew and I have a fairly different trading style now. So it's not like that book, you know, handcuffed me into doing one specific thing. But what it did do is it prepared me and said, okay, you know, before that book, I barely knew what brokerages were, you know, what I was going to be looking for, fees, you know, basic terminology, any of those things. And the book was fantastic
Exactly.
for
And you know,
really giving me an intro into it.
just to credit that, you know, I would say that nobody, I mean, I would say that, I mean, it would be extremely challenging to copy Andrew's style, because Andrew, by the time you're thinking what to do, he's already in and out and making you know, thousands of dollars.
Right. No,
He's
absolutely.
so sharp. He's so you know, off the cuff. You know, on the feet. He thinks so fast. Execution is so proper. I mean, you know, people might be thinking this is a pattern and they're going on a shot on it. You know, he might have taken a little bit of squeeze over 1 minute along before you guys on the go on the shot, or you enter for the shot, you're waiting for the, you know, it's pulled back and you're waiting for it, and by the time you already made the money and came out. So his
Right.
style is really crazy because he's a good scalper, is a very nice scalper, but it's very hard to have that kind of attention to details, and you know, to copy
He's
him is
one of the
really
best, just sheer momentum traders out there.
exactly. Yeah, I mean,
As far as his ability just to recognize where the stock's going to pop, and then he gets that pop, pow. And I mean, his risk management, considering the size of the account he has, his risk management is fantastic. I mean, because the other concern with trading that big account isn't just how much you can make; it's how much you can lose and how
correct. Yeah,
quickly you can lose it. So his ability to drop a position is better than most. I mean, he can get into a pretty hard position. I've seen him make some tough choices, but they've saved him a fortune because he decided to take the loss now instead of you know, bag hold it for later. And you know, so it's a lot of skill sets in that man right there. He's a
exactly.
phenom for sure.
All right, so let's get back to, instead of Andrew, let's put the focus
Sure.
on Thor now. Right. Hey, we can talk hours and hours on the Andrew skills.
Oh, for sure, for
Yeah,
sure.
so you know, Thor, you know, you said that your journey started from the Andrew's you know, experiences, his strategy, and now you completely changed the way you trade. Tell us more about your trading style, and what made you to change over the time. What was your initial trading style when you were learning, and how was your learning curve and maturity curve made you change on your trading style?
Yeah, absolutely. So, kind of going off of the conversation we were just having about Andrew, I quickly realized that I was not a fantastic momentum trader. The more that I tried to mirror Andrew, the more I really found that I was just struggling. You know, and it wasn't just about the bank size difference or any of those things. It really just was, I didn't have whatever that is, you know, his ability to control that. So I knew I was going to have to go a different direction. And that started a long journey. You know, once I really went through and sampled almost every strategy that's available. I mean, from the double tops to the double bottoms, everything. And then I realized that a strategy isn't enough. I need more, right? I need a system more than a strategy. I need to build out something more, and I need to be able to analyze and gather the information more. And that's when I went down and found my edge. And that's what I think every trader is going to have to do on your journey. There are a lot of folks out there, especially the gurus, which I try to not be one of, but they come out there and they kind of give you this whole, if you do this and do this and do this, then you're going to be able to make this much money. And the problem is that's not really true, because the guru doesn't know you. They don't know your psychology. They don't know your life history. They don't know your risk tolerance as an individual. They don't know your bank account size. They don't know your financial background. They don't know anything about you. So to be able to say, hey, if you can do this and do this and do this, I mean, I just don't presume to be so knowledgeable that I can make a statement like that. So I started looking into what works for me and what I could find, and then I found my edge, as I was saying, and my edge is VPA, which is volume and price analysis. So I really like using volume, and I use volume. It's just so good. No matter what the market's like, how big the time frame is, how small the time frame is, it doesn't matter if you have a big account or a small account. Everyone can afford volume, right? The volume comes with every platform. And if you can learn how to read volume, then you can find out where the big movers and are coming from, where the big orders are coming from, and then you can play off of those big orders. So you're no longer small guy fighting the market. You're almost like one of the big guys, because you're just going to wait for them to do something and then you're going to do it. So I went down this heavy trip down into VPA. First resource on that is this amazing book, which is the Complete Guide to Volume and Price Analysis. It's by Anna Cooling, for anyone who's interested. It's an absolutely fantastic resource. You can tell she read a lot of Richard Wyckoff. You can tell there's a lot of Jesse Livermore. There's a lot of influence by some really serious old school authors in there, and it was just a fantastic resource. And that book actually sent me down my VPA rabbit hole, if you will. So I tell everybody when they start trading using that, I kind of say, welcome to the matrix, because you get to this point to where you can actually start to read the price action. So now you're not worried about patterns anymore. You're not worried about ABCD. I'm not worried about ORB or reverse. I'm just looking for key levels, and then I'm looking for certain volume things to happen at key levels, right? And then I just play those. And it took a long time to get there, but my trading today is simpler than my trading was 2 or 3 years ago.
Awesome. So, why don't you just a little bit more elaborate? You said the key levels, and you said that, you look at the volume and you basically look for the volume spikes or any unusual activity in the volume on those particular levels. What levels you're referring, if you can just, elaborate for the listeners?
Yeah, absolutely. So there's a couple different things that I'm using primarily for the system and the way I trade. So first, in the VPA, you're looking for anomalies. So in VPA, we expect that a candle will form under certain conditions. So, and sorry for the hand, but that's what I got. So if the stock price moves up and you have a big move, and that big move happens on solid, average, high average volume, then nothing. You actually expect the price to continue in its direction, and as the price moves, we expect it to be accompanied by the appropriate amount of volume. Now, if the price is going up and up and up, and all of a sudden it hits a specific place, like let's say pre-market high, for instance, and when it comes into pre-market high, it hits that level, and then all of a sudden you see a large spike in volume, but the candle doesn't move, right? This is where a shooting star, for instance, would be named if you were more of a pattern trader, right? Or an isolated pivot, if you will. So, and you're going to see this volume anomaly, because what you're going to see is a candle didn't move very far, even though there was enough volume to make it move, which means you've encountered high selling, right? You've come to the top of a trend, you've hit a very large seller. And since I believe, as kind of using market option theory or things like that, that basically all we're doing is bouncing from large sellers to large buyers, as soon as I see that large seller commit, I'm ready for it to go back down to the large buyer. So I will short off of that underneath that large seller and use that change in supply and demand to pull the price back down. So the levels that I'm most often looking for are pre-market high, pre-market low, and the opening price are 3 of the easiest levels. Almost every platform draws them. And then after that, previous sessions, highs and lows. Between those, you've got about 10 levels. So you don't need much more than that. And then if you want to get a little bit fancier, and it's a lot to go into, but I use Camarilla pivot points for some of those concepts. So, and on top of that, those are the 3 main indicators that I'm basically using are the previous session levels, pre-market high, pre-market low, opening price, and then Camarillas, basically. And you're already talking 15, 20 different levels that I can pay attention to at any given time.
I see. Okay, so what I'm collecting from your thoughts, you kind of are more the reversal trader, where you go against the trend. So if the price is moving up, you find resistance in form of a pre-market level or high of the day, and you see that whether there is a big seller sitting around that area or you see any big volume there, and then you basically try to place with the entry, find an entry, and you place your trade. So you always go reverse to the trend of the
Yeah,
major trend.
it's actually pretty funny to think about that I'm just basically always trying to do the opposite of everybody else. But the main reason I do that is there's a principle in effect here, and I do a lot of work on what I call market auction theory. One of the reasons I actually laugh and say that I think I'm pretty good at this is because I actually grew up on a farm around hog and cattle, and we used to go to auctions all the time. So I have a very in-depth experience in auctions and how auctions work, right? So in the market itself is but nothing but a giant auction, and those same principles are in effect. And basically what we're talking about here is value. As value is set across the time frame, the stock is going to move, sorry for the rudimentary drawings again, but the stock is going to move up and down from value. And it's always going to be in search of value until it isn't, right? So I'm always looking at it and evaluating, are we going to return to value, or is this where we go away from value, right? So if we're chopping a range, for instance, I don't get chopped out too bad because I wait for it to go to the top of the range. And if it doesn't ignite and go out, right, then I will play it short and I'll play it all the way back down to the bottom of the range. Once it gets to the bottom of the range, I'll flip long and I'll write it back. And I can do that over and over again until eventually there's some volume indicator, right, at either the top or the bottom of the range that, says to me, okay, we're done now. Either that's we were getting buys every time we hit that level. This time we came down, we didn't get the buy. Right. So now I can say, okay, it looks like the bid's exhausted, so I'm not going to go long this time. I'll just take the whole position off.
Interesting, very
You know what I mean?
interesting. So you basically look also the level two and see, you basically try to find that there is a big buyer available to eaten up all the big ask, or vice versa, that there is a big
Exactly.
ask is available to eaten up all the big bits around that. So then if you don't find any of the
Exactly.
imbalance there, then you go and trade accordingly.
Exactly. And then so like you were saying, like what levels do you really like? Well, that's what gives me the answer on what level I like. So I'll examine through the levels and then I'll look at the level two, or if you have a program like Bookmap, or something like that, for instance, which I don't use, but many do. If you have a program like Bookmap, then you can look at the thermals and see where the liquidity is and what level, they're congregating at. So if you have let's say yesterday's low, and when you look on the level two at yesterday's low, you happen to see, that there's, like 3,000 lot there on like on a $30 stock. That's going to be a pretty good lot size. You know what I mean? So you think, okay, I obviously have a good amount of liquidity sitting down here right on this level, which is exactly where it bounced off of yesterday. Doesn't mean it's going to bounce again, but we don't know we never know what's going to happen, right? It's just about putting yourself on the best probability. And if that bid has defended over and over and over again, and he's still there, probably not going to decide to not defend this time, right? So you can those are the kind of things you're looking for, because again, when I play, I make this assumption that I have no power in the market whatsoever, right? I'm not a big bank by any means. I'm not trading with any kind of size or frequency that can make me influence the market in any capacity. So I don't try, right? I wait for the market to go somewhere, and then that's why I like playing reversals, because I'm a little bit better at telling when it's exhausted, right? When it's gone from value and it's so far away that it just needs to come back, right? So that's why I really like playing reversals. And those can be long reversals off the bottom, short reversals off the top. I mean, either one I'm perfectly happy to do.
Awesome. All right. So guys, if you have more questions on on the style, feel free to write it down. Feel free to follow Thor on the Twitter. He's good in giving responses as well. And if you have more clarification question, you can write it here as well. So Thor, the given is the more kind of reversal range, trader you are. Uh, how would you consider your partials criteria? Do you have any signs around that? Any parameters about the adding parameters, or maybe because you are going on the top and where you decide that you're gonna consider a stop loss, because I think you might be guessing around based on the level two, that okay, this is going to be the top of the day or top of this time frame. So how would you manage all these three important elements of the day trading?
Absolutely. So first thing, I like to employ a fixed risk method of trading. So when I trade and I take a trade, I actually use a hotkey that auto calculates, depending on where I'm clicking on my chart, how many shares I'm going to take based upon the amount of risk. So if I want to risk $100 net loss, if I get stopped out, I'll click where my stop's at, hit the button, and it figures out the rest. And that's been a real blessing, because that's kept me from a lot of slippage. When I first started, I used to encounter tons of slippage. 1 cent, 2 cents in 1,000 share position, that adds up really, really fast. And if you do that over 3-4 days a week, every other trade, I mean, you start to realize you're giving back hundreds of dollars a day, or hundreds of dollars a week, sorry, in that scenario, in slippage. So I really started focusing on that. What was the other part of the question?
About the partials and the adding
Yeah.
area.
So I pick how I'm going to partial depending on the type of position I enter. So I break positions into two types of positions, and one is called an initiative position, and the other is what I call a responsive position. So an initiative position would fall into items like ambushes or break of high of day trades. These are breakouts, right? These are all initiative positions because you really don't know where the stock is going to go, right? You're taking the initiation and you're going to buy now or short now, depending on your direction, with the expectation that it's going to instantly go in the direction that you want it to go. So and that could be the same as ambushing off the lows. Let's say you've got low of day, it's been tested low of day 2 or 3 times. As soon as it comes down to low of day, you go ahead and buy again, right on low of day. Boom, right? Those are all initiative style positions. And those, I look for very quick profit taking, because I don't really know, is this going to pop 10 cents? Is this going to run for a day or two? I'm not sure. So on that one, I'll go for 2 to 1. And then I'll drop 50% at 2 to 1, and then I'll start going down by 10% after that until I'm out. And then I'll do an add if it pulls back to a significant level and holds. But on initiative positions, I most often are more of not quite a scout mentality, but I'm not also looking to catch a trend there either, right? Because I'm playing a knife or because we're playing a breakout, I'm not really expecting this thing to go off and trend on me, right? I'm really kind of expecting it to go somewhere quickly. I'm going to get a little bit of money. As soon as it loses the momentum, I'm out. Now, the other is a responsive style position, and that's something like, think about playing like a double top or a double bottom, right? And these, you normally, depending on who taught you how to trade them, a lot of the times your pattern signal is a new 5-minute high or a new 5-minute low, depending on which direction you're playing, after hopefully a large volume event that sets it up. In these, since you're playing a trend reversal, you're going to play the trend on these. And since it's a responsive style trade, your stop's going to need to be a little wider, right? Because on an initiative style position, your stop can be incredibly small because you have a very, very obvious place where you want to stop out. On this one, not so obvious. So you're gonna have a little wider stop, but on this one, you can expect a much larger move. So on these, I often am going to be looking for something more like I'm going to be looking for more like 3 to 1. And on these, I go to 3 to 1, and I partial a third at 3 to 1, and I partial another half at 4 to 1. And then I go down, and then I start dropping by half positions until I'm out or I get a large volume signal. And I'll set trailing orders on those and let those just run until they lose the trending average or something like that. But both of those positions are taken, or those partialing methods are done based on, the type of entry I'm taking, because you can't do, it's hard to do that initiative entry and then get 3R. I get 2R all the time on them, not always 3R, but on the responsive ones, you can get 10R on those. So you want to make sure you don't want to, over dilute your position, if you will.
All right, I think that is the very nice input around the adding criteria and also the partial. I like the way you said that you have a 10% rule as you cover your first milestone of a 2R, and then you take the partials as the stock as the market make available in front of you, and then you just keep
Mm-hmm.
taking it. And also the adding is always good on the key levels, on the consolidation, on the pullbacks, on the trace, rather than some people as a novice trader, we have a tendency to just add as the stock moving into a direction. So always wait for confirmation of the trend you are anticipating on the move. And and also you need to ask about your entry as well on those. If you are scalper, so you might not have a better entry because you might be joining in the middle of the trend. But just like as Thor's style is more on the low of the or the beginning of the new trend. He tried to anticipate based on the volume about the new trend from the intraday level. From that, he has a more room to see the retracement and the consolidation and moving up to the level. So he is always going to get the best entry because we're going to see as a pattern once the pattern emerges. And what I realize, what Thor is going to more anticipation from the volume base to see that there's going to be a pattern, in the intraday level. So very
Well,
interesting.
the way I chime in on that one is just remember that price action creates patterns, not the other way around, right? So the pattern is an after effect of the price that has already occurred. It's same thing as moving averages or any of those things. It's why I like using levels, because they're fixed, things that are already there. So if you see something bounce, something's happened there in the past, so you can anticipate something happening there in the future. But with patterns, it really helps. And patterns are great. It's just patterns form under very, very similar VPA instances all the time, like an ABCD pattern, for instance. You almost always have an engulfing bar that's on high volume, and then you have a cup that forms on a retracement under low waning volume. And then when you make the new 1 or 2 minute high, depending on how you play it, you should see an ignition in volume there that pushes out and makes new highs, right? An ABCD pattern, you can draw that out one way. I just described how it happens in volume, and they happen like that
All the time.
9 out of 10 times, right? I mean, but if you can start to understand what it takes to put a pattern together, then you can start to anticipate and say, hey, I would like to trade an ABCD here. If it does this, then I will trade it as an ABCD. And then if you see a weird volume occurrence in the middle of your pattern, like you come to the trough of the pattern and all of a sudden you see an extreme amount of high volume at the bottom of the trough, that might be a problem for you. You might not want to trade that pattern now. So there's just some little things that can help out. You don't have to be gung-ho VPA, but it's a nice thing to add into your strategy, even if you're heavy on patterns.
So I just want to add two things for our listeners for them to have a context. So one, Thor discussed that he used the fixed hotkeys. So he uses a DAS platform, and DAS platform gives you the flexibility where you can program, your own hotkeys. And that's what he was referring, that they have designed their own hotkey to making sure that that the stop loss has been calculated based on the risk, where on the price he marked as a stop loss. And the other thing I wanted to clarify, that Thor used a couple of times the ABCD pattern is just like a bull flag, the one big bar, or bear flag, where one big candle, then the two or three smaller candle, covering, going towards the beginning of that long candle, and then the next candle comes in sharply up and cross over all the smaller candles. So that's kind of a starting of the trend is A. First bar, the pole is a B. Then the C point is the when the pattern is the smaller is new candles are moving and covering, going towards the beginning of the candle. And the D would be the point where it's sharply moving up and crossing all the smaller candles. Am I right, Thor? If you
Yep, Absolutely.
All right. So yeah, guys, feel free to ask clarification questions. So I'm not sure that all of you guys are from the Bearable because community, because he might be using some kind of a terminologies which may be unique for you guys. So
Sure. Yeah.
feel free to ask those questions. I'm trying to explain so that the other user, when they see later on, they would understand that what we are talking about is not something
Yeah.
rocket science.
Yeah, we like to feel like we make up new names, but it's all the same stuff. I mean, A B C D, what, bull flag, cup and handle, you know,
Yeah,
there's you can use quite a few to get into those real
yeah.
fast,
It's
but
always
they all
good to
have a
have your
very
name. Yeah.
similar volume profile. They're all like the same basic thing.
Yeah, and I think it's always good to have your own name, so that's where you can adopt that strategy. This become your baby, because everyone has a different, slightly different way of trading
True.
those patterns. Some people like to go on the point D. Some people like to start consolidating the position from point B to point C, because you never know when point D will come after 2 bars, 3 bars. So some people just keep every drop, they just keep buying until the trend fails, right?
Mm. I wish
So,
I was better at
huh?
that. I wish I was better at buying until the trend fails. I'd
Yeah,
love to be a little bit better at that, but I tend to just get in and then
yeah.
get out and be done.
It's depend, right? Some people just look full position. I've seen many people just like, for instance, if they're, as you said, for instance, just take an example just for clarification and for understanding. So, for instance, based on your hotkey for $100 risk, the share size came in 200 shares. And right now, point A has been created, point B has been closed. Now you don't know where the point C going to be. So I've seen the traders, what they do, they keep buying 50 shares after each drop. And if the D comes closer, then the full size comes to the D. But if not, then until they buy, until the price went below the point A. At that time, basically, you have failed the trade.
Yeah, I mean that sounds great. I think tiering into your positions can be very effective as long as you're just keeping an eye on your downside risk. As long as you're not just averaging in just for the sake of it. But if you start off with an initial concept and then you build raising your stops as you do it, I mean I've seen that very successfully used.
Yeah.
But I wish I was someday. I'll get a little bit better at that myself. We're all trying to involve to increase how much profit we can squeeze out of a winning trade. So hopefully, you never know, might be able to do more of that.
So tell us more about, that uh, for the new traders, basically what advice you want to give to them, how you have yourself stayed focused, how you've achieved your accomplishment. It's very trading is a very isolated journey. Everyone has to, even if you have a community, even you have your friends, but everyone take their own time. As you said, right, your circumstances are different, your risk tolerance is different, your capital is different, your need to meet your ends on a daily basis is different. And
Mm-hmm.
by putting everything together and through with this journey is really really hard, because as emotionally we might be consistent for 3 weeks, 4 weeks, 5 weeks, and one day we would just become confident and you say, I got it, I nailed this market now. We raised the position, increased the position, and that day we wiped up all our profit and even the negative, so we again starting that journey negatively. So how, and this is very common for everyone, I've been through with that. So how would you advise for all the new traders or the experienced trader, how we can stay focused and successfully navigate this journey?
So the first thing I think that's really important to do is to have the proper, and you kind of already said this, which is have the proper kind of thought going into this about your expectation and how long it's going to take to get out. And so first off, I had a lot of support from my loved ones. My wife, most specifically, really pushed me towards it. She saw that I had something going on there, and she kind of gave me the, yeah, do this, and so with the family support and stuff like that, it made that a lot of help. The community did help a lot because my wife doesn't understand anything about trading, so if I have a trading issue, that's some place I can go to kind of talk with that. But what really helped me out the most was actually having that proper expectation and not putting the wrong kind of pressure on yourself for performance. There's no career out there, and I'm serious. You're not going to become an electrician in 6 months, right? You're not going to become an auto mechanic in 6 months, right? You're not going to become a doctor or a neuroscientist or a biopharmaceutical engineer like Andrew was. You're not going to become any of these things in 6 months. And they're all very high-paying, highly specialized jobs. Well, trading is also a high-paying, highly specialized job. So to expect to be able to come into something this complex and to be able to learn one or two little things that's going to give you the magic ability to make tons of money, I hope I'm not crushing a dream here, but it's just not how it's going to be. Right, it's going to be going to college. You're going to buy books. You're going to get resources. You're going to practice. You're going to trade. You got to learn a software program that's incredibly complex and learn how to code it and make your buttons and all of these things. You have to make investments in your bank account and your computer system so that you've got the ability to trade. I have 2 internet connections at my house in case one fails, right? So, I mean, there's all of these things that you're going to have to bring together over a long period of time. So now to refer to what you're saying before, I like to use I hope I don't butcher the name. I think it's the Dunning-Kruger effect that I kind of cite a bit, which is the journey that I went on, which is basically in the beginning, you kind of start off and then you kind of get really, really good, really, really fast. And then you get to what the Dunning-Kruger effect refers to as the peak of Mount Stupid, because basically the only reason you're doing that well is because you just haven't figured out how hard it is yet. It's really interesting how almost every trader seems to go through it. You just kind of have this blind luck that happens in the beginning. And then I think it's because you encounter your first big loss. And as soon as you encounter your big loss, all of the psychological aspects of trading come into play, which is where the real work is, right? Reading books and learning patterns and learning how to do this and this, all of that extremely easy in comparison to actually being able to execute what you've learned. Right, and being able to hold your positions and actually not get greedy, not get into a position, not to FOMO, not to, blow your mentality, not to be one of those guys who you make consistent money 3 or 4 days out of the week, and on the 5th day you liquidate your entire account, right? Because you just can't emotionally deal with losing for one day, right? There's so many different things that come into that, and then you learn that fast, and you come down to what we love to call the valley of despair. Right, and then that's where the real work starts. Almost every great trader started becoming a greater trader after they considered quitting trading. You all got to go down and just kind of have that brutal moment, and then you kind of have to make the real decisions to put in the real work. And that's really when I started. When I went live, I had a couple of really bad sessions right after I went live, and then I realized that I had done sim wrong, I had practiced wrong, I had done a bunch of things. So wrapping that all up, the main thing for anyone new is to have the right expectation for how long it's going to take and to be okay with that, right? I know some people whose families say, wow, you've been learning to stock trade for a year and you're only making like 20 or 30 bucks a day. Well, nobody went to the med student at year 2 and said, why aren't you making, $200,000, $300,000 a year, right? You're not there yet, and you shouldn't be. If you see the traders that you see that are performing like that after 1 year or a year and a half that are just crazy, just understand that those are, and I'm not saying they're not truthful. I believe they're probably truthful. Just understand they're going to be the outliers. Most of you, we're going to be the same. We're going to be in the middle. We're going to work hard. We're going to have to study. We're going to have to learn the different ways to do it. I didn't learn one strategy, right? One pattern. I learned all the patterns. Right, I learned the level 2. I learned how to read order flow. I learned how to read stock charts. I learned how to read candlesticks. I learned how to read volume. I mean, it's years and years and years. I've read dozens of books, right, on stock trading. All of these different things put together to get me to the point to where I am now. And now I feel like I'm a decent trader, and it's 4 years in, almost 4 years into my journey, and now I really do what our Azira's guy here is talking about, where he's just saying, you start to finally get that confidence. And then let me substitute the word confidence with conviction. I wouldn't say I'm overtly confident at any given time I'm trading, but what I do have is conviction. because I've seen the system that I use perform and work over and over and over and over again. It's not about confidence that this trade's going to work. I just know that if I use my system, I'm only going to lose so many, and when I win, that win is going to recover what I've lost and put me back up, right? And that's really more of what it's about, developing your system, right, so that you can manage your risk and manage your emotions, because those are the two things that are going to beat you up in trading: risk and emotions. Everything else, arbitrary.
I think well said. I think a lot of the good items came out. That I would say the jewel come out from the tour, and as a trader, as a new trader, especially, what happened is that we look more towards the profit, and what we do, we think that, okay, one pattern or one idea or the one strategy worked in the one last 2 weeks is going to work in the next week. Market is so random, and that's why market is for everyone, because market is random. Market is a multiple, infinite numbers of output available in every single moment, right? It's just not like up and down or sideways. For every price action, there is a multiple and the infinite, possibilities there. Now, the only way we can get it is not controlling the market, not controlling the patterns, is controlling ourselves. And that
Yep.
is very hard. I mean, it's easier, as a
It's
teaching,
the hardest part.
that's the hardest part, exactly,
It
right?
really is.
And
I mean, just think about it. It's just any high performance. What's the difference, between a race car driver and someone who's really good at driving cars, right? It's their ability to perform at that level. It's just emotional control. Obviously, talent, sure, but everyone can kind of drive a car. Why can this guy drive a car at 210 miles per hour, right? Everyone can hit a baseball. Why can this guy stand up there and hit a baseball that's moving 90 miles an hour? Practice, talent, sure, but his control, his ability to stand in front of that ball and have that ball fly at his face at 90 miles an hour before he swings the bat, right? You could be the best batter in the world, but if you turn your eyes away every time the ball's coming at you, you'll never hit it, right? And that's actually similar to the way trading is and all of those things. It's all of the things that traders do are common. You can go to Warrior Trader, you can go to BBT, you can go to J Trades, you can go to Pivot Boss. You're going to get a lot of the same information through these various groups as far as technicalities go, right? The difference that you're going to get between the various ones are actually the expectation of performance and how we handle psychology. BBT, for instance, Variable Traders, is a very big psychology house. We put a lot of effort into our trading materials, sure, but I mean, we've got dedicated psychologists there. We've got NADA, we've got all of these various, we've got Mike writing, psych books. He was a performance instructor for the military. I mean, we've got lots of people. So it's funny where everyone else is saying, hey, you got to learn how this chart. We're really focused on, you got to have those things in place so you know when to do what you're supposed to do. But the real hard work is right in between your two ears, right? It's just you. You gotta figure out how to execute, and that's where it gets really, really difficult. Can you hold the position as long as you're supposed to? Can you partial when you're supposed to, profit when you're supposed to? There's a lot more. We spend 90% of our time in trading on entries, even though the entry really accounts for very little of the success. The success comes in the management. Do you stop out when you're supposed to stop out so that your risk stays small? That way your winners can win big. And when your winners do win big, are you able to hold those positions and maximize them to get as much money out of them as they can? Or are you going to get scared, get your fear going on and just dump the position as soon as you get a little bit of profit, and then sit back and be mad while it goes 10 or 20 R in the other direction, right?
yeah, exactly. And I guess the only way you can combine all three together and is through through the journey, through the experiences, right?
Exactly.
There's a thousands of books available on psychology. There's site, you will find a psychologist, but is that sometimes there is the call, unconscious blindness, or unconscious ignorance. That is a
Hmm.
very interesting concept, in a way that you will only will able to consciously realize when this thing happened to you, unless you might have read that, you might have heard that, but you might not have noticed that, you might not have felt the pain of that point, because for you is something is unknown. For you that concept doesn't exist. You will only able to realize that when this happened to you and there was a right time for you. So it's so
Hmm.
funny, but
Absolutely.
that is the most weirdest part of it, right? Or you say, oh
Yeah, you
man,
spend
why
so
did I
much
do
time
that?
focusing on one aspect and then realizing it. It always seems to take a year or so to realize, man, I spent all this time. I probably should have been working on that more. But that's why it's a long journey. It takes time. I think the most successful traders are just the ones who are patient and are willing to just take the journey. It's going to take time. You got to figure this stuff out. You got to lose. We talk all about how many trades we've won. I've lost thousands of trades, to get to the point to where I can hit more often now. So I mean, it could be 10,000 trades. I don't. It'd be fun to run a report actually if I can. And at least on this broker, I could probably pull it off, run a report, and just see how many trades I've actually lost. Like I know it's thousands, if not 10,000s of trades, right? But I've also won, a similar amount of trades, and because risk management is good and psychology not bad, I managed to extend that and do pretty well.
With the same note, would you add a bit on the same psychology by that, how would you manage your daily goals? How would you manage your very red days or the red days, and or about the very green days? How do you know that this is the time to stop? This is not your day, or you kind of a guy, you just keep pressing it until the day over. You know, w-
Yeah, so I have a lot of rules around that kind of stuff. So I have I don't. You said one thing too about like not focusing on profit, and I agree with that too. I actually don't even have my profit on the screen, like my P&L. I have an alert that sounds when I've broken my goal for the day, right? So that I know I'm there. But I don't like to focus on the profit. I like to focus on the process. So if I hit my max loss or my max goal, I have an alert that goes off and tells me that that's happened, and then that's the end of the day for the most part. If I break goal, depending on how much I break goal by, so let's just arbitrary numbers. Let's say my goal is $300 a day. If I land anywhere between, in this instance, since it's 300, it would be if I land anywhere between 280 and 350 or something like that, I'm done trading for the day. So that's my goal. And I will not take another trade risking losing that goal, because all of my worst, we lovingly call them Hulk days, where you just go monster and blow your account out. All of them happened actually when I was over goal in the first place. So I just feel like, especially if you've gotten there one or two trades and you're already at goal, your probabilities of hitting a third good trade are really down. If somehow it takes you three or four trades to get to goal, you're at goal and you've had three or four good trades and you're there, you're not, probabilities of hitting a fifth and sixth good runner, I mean, you just got to really start looking at how much you hope to achieve. And I'm a what do you call it? I'm a career trader. I plan to do this for the rest of my life. So I'm not planning on hitting any home runs today. I really don't plan on hitting any home runs tomorrow. I just want to scrape, a few $100 out of the market every single day, and then I'll do that. So if I'm over goal and I'm like I actually managed to be above 350, then what I can do is I can give myself, I'll give myself a trade or two. Often, I'll say, okay, you're over by 50 or $100. You can take two $50 trades. If those don't work out, you still stop at goal, right? And then I'll stop, and that tends to work out really well for me. As far as psychology goes, what I'd recommend for everybody is take it slow. When you start slow and start build. Focus on the process, not the profit. So if you can trade $15 risk per trade and count that as your R, and then make 3 or 4 R a day. So that means if you're trading 15, you're averaging out somewhere around 45, 50 bucks a day. If you can repeat that, you can scale it, right? So focus on becoming good and not worrying about the profit. And then once you scale, this is how I like to do it basically. So what I like to do is, let's say my current goal is that. Let's say I'm doing $15 risk and it's $50 a day is what my goal is. Then as long as I'm hitting goal, I'm good. And then you say, well, it's time to increase and go higher. What a lot of people do wrong is they will move their goal and say, now that I'm making $50 a day, I want to make $100 a day. But what's happened is you haven't changed your risk level. You've just changed your goal. So you're expecting yourself to perform way better than you've ever performed in order to achieve that new goal. That doesn't work. You want to make it easier for yourself. So if you're doing well at that level, you raise your risk, not your goal. And then what will happen is, by default, if you're performing well, you will overshoot goal. If you start overshooting goal a lot, move your goal to wherever your new butter zone is, basically. So if you move to $25 risk and now you're finding you're hitting 75 every time, that's your zone. You're hitting 75, you're 3R, that's perfect. $25 to 75. 50 gets you up to, 125, 75, 100, 250, 300, 150, 500. It only takes a little bit of time, $5 at a time on your risk tolerance, to exponentially grow to the point to where you're making $400 or $500 a day. But you got to have the process in place first, or else you're just going to lose a lot of money. So you might as well take it easy on yourself. Don't focus on the profit. Focus on your process and make sure that's good. Once you're comfortable there, then you can go to what I was talking about before. It's not about confidence. It's about conviction, right? I have a system that works, and I know if I use this system, I will win. And if that system starts to fail, it's not about me. It's not my fault. It's the system. I will gather data. I'll review the system, figure out why it's not working, and then test and make changes, right? Keeping yourself out emotionally in that fashion will totally take it to the next notch for you.
I think it's already 1 o'clock, so I don't want to take too much time of a Thor. So
maybe we can do it again sometime.
yeah, for sure. And just a last couple of minutes, if you guys have any questions, please, as a last window, you can ask, and I will just give a mic back to Thor just to ask his last few words. Any last advice for today you wanted to give it to all of us or the new trader. And meantime, if I receive any questions, I will bring it towards you. If not, then we can end on your last words.
Cool. So yeah, let's really just a closing sentiment, if you will. This is a journey, right? It is difficult and it is achievable, right? But it's not quick. So if you're a new trader coming into this thinking that you're going to use your Robinhood account and you're going to invest into a couple of low flow things, I'm not saying you won't find an instantaneous success in some regions on that, but a career it will not make, right? If you want to become a real trader that really focuses, it's saddle time. It just takes forever, right? It's going to take you a few years, 3 to 4 years minimum, really, in my mind, to really understand the various facets of how the market works, how the patterns are built, all these different things. But if you put that time in, there is plenty of money in this market for every single person to be a winner in it. You just have to be ready, willing to put in that time in order to get to that point. And that's going to be the struggle. You're going to encounter lots of doubt. You're going to encounter lots of issues. And the difference between the trader that wins and the trader that doesn't is the trader that's resilient enough to push through that doubt, build their system, test their system, and actually get it working. So if you can do those things, there's definitely a trading career here for you. If you can control yourself emotionally and you can learn some strategy-based material, I mean, it's really something that can be done.
Awesome. So thank you very much for Thor for your last words, and I completely agree. Take it slow, take it light, and build that on your baby steps, and definitely you're gonna reach there. Uh, it's just like it's a very difficult path, but at the end of the path is all green. But you need to go through with a lot of kind of just like in a Halloween dark room. Is every there is a danger in each room. There is noises you will hear, self doubt, greed.
Mhm.
All these kind of things will be disturbing you, and let you not to focus on the right thing. But if you stay on track, uh, purpose is to find this as a career, then definitely you're gonna reach there. So thank you very much. Thank you everyone for joining. Thank you Thor for giving us your valuable time.
You're welcome.
And I really appreciate everyone being coming here and Thor for you.
All right. Thank you for having me. I appreciate it. Have a
Thank.
good one.
All right. Have a good one.